Hello everyone, welcome back to my YouTube channel. In the last class, we studied about methods of recording depreciation. In that two methods, direct method or asset account method, and second one it is indirect method or provision for depreciation method or accumulated depreciation method. So in today's account, we are going to solve a problem under direct method or asset account method. So what is the rule here? In this method, we will charge the depreciation directly, that is deducted from the asset account, right? And it means we reduce the value of the asset every year by charging depreciation. We reduce the value of asset every year by charging the depreciation. And journal entries we need to pass here for purchase and for depreciation and for transferring this depreciation to profit and loss account. So let's solve the problem. See here, Singhania purchased a plant for rupees 5 lakh on April 1st 2017 and spent rupees 50,000 for its installation. Means we have to take into account 5 lakh plus 50,000 for its installation, and the salvage value of the plant after its useful life 10 years is estimated to be rupees 10,000. So original cost of the plant is rupees 5 lakh plus 50,000, 5 lakh 50,000, and we need to deduct the salvage value, that is rupees 10,000, and we need to divide it by it 10 years. So we will get the depreciation amount. Clear? So here see here, record journal entries for the year 16 and 17 and draw up the plant and depreciation account for first 3 years, given that the depreciation is charged using straight line method. Means here we have to solve the problem under straight line method. If the books of account close on March 31st every year and the firm charges depreciation to the asset account. So here first step what we have to do, first we need to pass the journal entries. So what is the first step? First step for purchase. What is the journal entry? On 1/4/2016 plant account debtor to bank account, that is rupees 5 lakh. See here, purchased a plant for rupees 5 lakh. So write down 5 lakh. So being purchase of plant. And second entry for installation expenses, that is rupees 50,000. Again plant account debtor to bank account being installation of plant, that is rupees 50,000. After at the end of year what we have to do, we have to pass the journal entry for depreciation. Now for that we need to calculate the depreciation, right? See here, working note, calculation of depreciation. Purchase cost how much? Rupees 5 lakh, and installation cost 50,000. So original cost is rupees 5 lakh 50,000. Now depreciation amount, original cost of the machine minus salvage value divided by years. So life or life, that is 5 lakh 50,000 minus 10,000 divided by 10, that is equals to rupees 54,000 per annum. That is our depreciation amount. Now let's solve the journal entry. So depreciation account debtor to plant account being depreciation charge for the year, that is rupees 54,000. After that last entry we need to transfer the depreciation to profit and loss account. Profit and loss account. I think you are not able to see the journal entry here. 1 minute I will write down here. So the journal entry is profit and loss account debtor to depreciation account, that is rupees 54,000. This is our last entry. I will write down here. Clear? That is on 31st March 2017 being depreciation debited to profit and loss account. See, profit and loss account debtor to depreciation account 54,000. So what are the journal entries we need to pass? For purchase and at the end of the year for depreciation, and after that we need to transfer this depreciation or debited to profit and loss account. Profit and loss account debtor to depreciation account. Clear? So these are the journal entries. So first part is over. Now what they said, see here, draw up the plant and depreciation account for the first 3 years. For first 3 years we have to draw up the plant and depreciation. So now let's first we need to prepare the plant account. After that we will prepare depreciation account. See, plant account, this is the format of ledgers. that is date, particulars, journal folio, amount, date, particulars, journal folio and amount, debit, credit. So first on 1/4/2016, see the journal entries. Plant account debtor to bank account. Here plant account that is debited to bank account. Plant account debtor to bank account. Right, here bank account that is credited, so in the plant account we need to debit the bank account, that is to bank account. In my previous classes I detailedly explained about the ledger accounts. If you don't know about ledgers account, please watch that classes first and proceed with this one. Clear? So to bank account, how much? In journal entries we credited the bank account, so in ledger account we need to debit it. That's it, right? That is rupees 5 lakh. Clear? And for installation, plant account debtor to bank account. Here we need to debit the bank account for installation cost, that is rupees 50,000. Clear? After that, next entry is depreciation. Depreciation account debtor to plant account. Here depreciation account is debited. So in the ledgers, in plant account, we need to credit the depreciation account. That is on 31st/3/2017, at the end of the year, we need to charge the depreciation, right? That is by depreciation account equals to 54,000. Here see, for all the 3 years depreciation amount will remain same. Why? Because here we are following the straight line method of depreciation. Clear? Now we have to total. Here 5,50,000 will come. So here we need to write down by balance carried on. That is on 31st/3/2017. That is equals to rupees 4,96,000. So 5,50,000 minus 54,000 equals to rupees 4,96,000. So for 3 years we have to prepare the plant account, right? So next year on 1/4/2017, that is to balance brought down. How much? That is rupees 4,96,000. And again we need to, at the end of the year, we have to charge the depreciation, right? That is on 31st/3/2018, by depreciation account. How much? Same amount, because here we are going to follow the straight line method of depreciation. So that is rupees 50,000. Again by balance carried on, 4,42,000. Again on 1/4/2018, to balance brought down 4,42,000. Again charge the depreciation at the end of the year, that is 54,000. So by balance carried on is 3,88,000. So here 3 years will 3 years are finished, right? So on 1/4/2019, just write down to balance brought down, that is 3,88,000. Clear? This is, in this way we need to prepare the plant account. After that we need to prepare the depreciation account for first 3 years. So see here, what is our first journal entry at the end of year? Depreciation account debtor to plant account. Here plant account that is credited. So in the depreciation we need to debit the plant account on 31st/3/2017 to plant account 54,000, that is depreciation amount. And transfer of depreciation, that is entries profit and loss account debtor to depreciation account. Here profit and loss account, that is, see here, debited. So in the depreciation account we need to, what we have to do? We need to credit. That's it. That is the logic behind this ledger account. See, by profit and loss account 54,000. And for the next 2 years we have to do same entries. That is to plant account. This is for charging the depreciation 54,000, same amounts, because we are following the straight line method of depreciation. And again at the end of the year 31st/3/2018, by profit and loss account we are transferring the depreciation account to profit and loss account, that is rupees 54,000. Again for 2019, to plant account we are charging the depreciation for the year 2019, that is 54,000. And at the means after that, after charging depreciation, we are transferring the depreciation to profit and loss account, that is by profit and loss account, that is rupees 54,000. Here don't get confused about the depreciation account, because they are same for all the 3 years, because we are following the straight line method of depreciation. Clear? So in this problem, first we passed the journal entries. After that, we have prepared the plant account and depreciation account for 3 years. Clear? See what the rule says here. It means we reduce the value of the asset every year by charging the depreciation, right? Here we are reducing the value of the asset. So for the first year, it's a 5 lakh 50,000 minus 54,000, right? And after again we need to deduct the same depreciation account 54,000. Again we need to deduct 54,000 for the third year. See here, the original value of the asset will change, means it will decline. Clear? So in this way we have to solve the problems under asset account method, that is direct method, when in the case of straight line method of depreciation account. Clear? So I hope this class is clear to you all, and in the next class we are going to solve the same problem under same method, that is under direct method or asset account method, but under written down value method. In that problem we are going to follow the diminishing value method of depreciation or written down value of method of depreciation. Clear? So if you have any doubts, please leave a comment. Thank you.